If you're looking at holding, staking, or yield farming, using DeFi to generate some income, or mining, how much are you investing in this venture? Is it a couple $1,000s worth, or is it $1 million worth? So there are 4 ways that you can earn from crypto: holding, staking and yield farming, decentralized finance, and mining. If you're holding and you're holding long term, the main consequence is going to be income tax, and likely in the form of capital gain. Staking and yield farming is more like passive income. Unless it's in a business, unless you're doing a lot of it like through a corporation, then it might be treated as business income. DeFi, decentralized finance, is typically treated as passive income. The difference between active business and passive income, of course, is, active business is treated a little more preferentially. Passive, you might lose some tax benefits, lower tax rates and things like that from passive income. And that would be, for DeFi, it's like interest income from lending. Mining, the way it's taxed is the value of whatever you mined at the day that you mined it should be included in income as your income. So I've been the co-director of the Osgood blockchain program now for 7 or 8 years, since 7 years out. And in the first one that we did, we had an attendee who was a Canada Revenue Agency investigator. In subsequent years, he became a presenter in the program. Over the years, we've seen how sophisticated they become. At the beginning, they were kind of just like trying to figure it out, which is why they attended the program. But as of the last one that we did, and in fact, not only is the CRA, but the RCMP also comes and speaks at our program about their investigation techniques, and they have become extraordinarily adept at finding out, because the one thing about all this is it's immutable and it's public. It is not something that you can say if you have a record anywhere of the transactions. It's a public ledger that you can trace back. So if you look at what the date was when it was mined, what the value was at that time, by looking at one of those, World Coin Index or Coin Market Cap or one of those websites, you can go historical and see what it was worth at that time. And it would not take a lot for the CRA to find out about that. The only way that they wouldn't be able to is if there was no on-ramp or off-ramp, which makes it very difficult. So if you mined some Bitcoin and you're just holding on to it, it's conceivable that nobody will ever know. Because all it is, if you look at the blockchain and you see there's no way to know it was you. It's impossible. But at some point, you're going to need to cash it out. And if you use any credible organization to cash it out, like a registered money services business of any kind, OTC desk or a crypto exchange or something like that, that's your off-ramp. And they have to do KYC, which means they have to verify your identification and report any transactions. I think it's over $10,000, things like that, to FinTrack and all that. FinTrack and CRA may or may not share information. It is like if they trace it back to the exchange, like if they see money going into your pocket and it came from a bank account that was one of these exchanges, they can investigate the source of the trade and they'll know what you did. So, like the off ramps and the on ramps are where they get you. If you're only using decentralized exchanges, you're just keeping it all in cold wallets, it's conceivable that nobody will ever know about it, but you won't really be able to use it to buy anything. You're just sitting on like magic internet money. So like what are you going to do with it? It could be worth millions, but if you can't buy food with it or your rent with it or buy a luxury car or whatever you want to buy, it's useless. If you're holding, then one of the best strategies is to just cash out slowly over time and keep it in your name personally. Because if you get benefit from capital gains treatment, it's taxed very preferentially. Another consideration is you might want to use a corporation or an offshore trust. Now we're going to talk about offshore in a future episode. Corporations, if you roll some of it into the corporation and you find that there might be a date in the future where you're waiting for a strike price, and so you can keep some of it in your name personally, but you don't want to cash it all out if you hit that strike price, corporations pay less tax than individuals. So if you roll, let's say 75% of it into a corporation, keep 25% in your name, you can cash out that 25% over time. And then if all of a sudden you see that strike price happen, you can cash it all in the corporation and it will get taxed at a lower rate than if you cashed it all out personally. And then slowly in the future, you can start drawing it out of the corporation, and there are ways to mitigate your tax liability there. So with staking and yield farming, probably one of the best things to do is use a corporation. So rolling your assets into a corporation and then doing your staking or yield farming so that you can argue that it was done in the course of business. And if it is done in the course of business, it won't be treated as capital, but at least it won't be passive income, because passive income can be taxed at more onerously. If you're looking at holding, staking, or yield farming, using DeFi to generate some income, or mining, first thing you should look at is how much are you investing in this venture? Is it a couple $1,000s worth, or is it $1 million worth? Because if it's small, shouldn't even consider doing any kind of structure. And then based on the type of structure you're doing, you might want to think if you're holding to try and cash out little bits over time. If you've got a large amount that you're holding, you might want to consider rolling something into a corporation. Staking and yield farming, as well as DeFi, it's a small amount. You might want to consider just doing it in your name personally. If you're using a lot, you might want to consider using a structure. And then for mining, if it's only a little bit, then maybe characterize it as a hobby, and then your income that you're making from it would not be taxable, but still taxable when you sell. So that's pretty much the different ways that you can earn income from crypto and the way they're treated in Canada for tax reasons. That's today's show. I hope you found it helpful. Looking forward to seeing you next time at the CrypTax podcast.